Hello everyone, and this is Charles Moon with Prosper Trading Academy, bringing you your live market commentary. And today we're going to talk about the NASDAQ. Oh Lord, the markets. Remember, this is a recap video where we found support and now finding resistance. It started at the 100-day. It's now at the 200-day, which is this blue line here. And that fallout caused a nearly 500-point drop in the NASDAQ in 1, 2, 3 sessions. Today we're creating an inside bar, which means that we can revert up, but if it does go back down and take out these lows, our expectations is that it could easily retract. I'm going to highlight it all the way back down to these old lows right here, which is around 6,300. That would equate to a 400-point drop in the NASDAQ from here. Now, lately, that's kind of been like, between like 2 and 4 trading days, so to speak. Really bad trading days, but nevertheless, that weakness has still come into play. I talked about Amazon here at that 1825 range. Something incredible has happened in Amazon for the first time since 2016. It closed and then opened underneath the 200-day moving average, and in turn immediately rejected and went down. They found immediate resistance at that range and went straight down. That speaks volumes about the risk-off move that we're seeing, especially in a name like Amazon. I have no doubt this stock is going to be bought up. However, I just don't think it's going to be fairly soon. The market's currently up right now in the Dow and the S&P. We're down in the NASDAQ by 4%, and Amazon's down 2.5%, and the NASDAQ's barely down. I don't know where this is going to go. Maybe 1,300, maybe even 1,000. But overall, what I've noticed with the markets is a very familiar picture. Lower highs and lower lows. We're below every single major moving averages. The 200 period, the 100 period, the 50 period. These are benchmarks. Short-term, intermediate term, long-term strength and weakness in the markets based on where the ETFs and the stock are trading. Well, we're way below these levels now. And I'm not saying that a market correction, quote unquote, will happen and continue. Last time we were in this range, the markets rallied back to new all-time highs. But there's a stark difference between a straight line move down that we've had previously to a move that's been accelerated, rallied, only to find sellers fade that rally down. Lower highs, lower lows start equaling to downtrend. As fast as the markets have gone up, folks, it could go down just as quickly. We're going to have to wait and see. When stocks like Amazon start to unravel and find technical weakness, that is what wakes me up. If we start seeing Apple and Netflix and Google, which already is weak, and I'll throw up Google right now, and all these other names like Facebook breaking through 150, just continue on down, folks. Just like it goes up with higher highs and higher lows, we're now seeing the lower highs and lower lows. And you saw that in Google early. Look at these channels descending. Look at the green lines descending. We may be near the bottom of that move, but that's only a pure speculative assumption. The way that things are moving right now, fortunately, there could be a lot more downside. We're going to have to wait and see how November and December plays out, but I think that there is a potential for a down move, so be careful, everybody. Let's hope for a rally. As of right now, I don't see signs of it, folks. Now, as I wrap it up, I do want to mention that stock and stock options trading does involve a substantial degree of risk. It may not be suitable for all investors. Past performance is not necessarily indicative of future results. Do take care and do be careful, everybody.